Welcome back, everyone. In today's video, we're going to discuss Tesla's Q1 2024 earnings results. We got the financials, we got the conference call, we got the good, the bad, the ugly. Oh, and also, at the end of this video, I'm going to give you my Tesla DCF valuation. That will be how much I believe Tesla is worth today. By the way, Shama says to like and subscribe. So, how did Tesla do post-earnings? It did magnificent, up 12%. Now, let's see. First off, let's go to Reuters. Remember this article? Exclusive. Tesla scraps low-cost car plants amid fierce Chinese EV competition. Debunked. Now, where Reuters went wrong was this paragraph. They stated that the decision represents an abandonment of a long-standing goal that Tesla chief Elon Musk has often characterized as his primary mission: affordable electric cars for the masses. His first master plan for the company in 2006 called for manufacturing luxury models first, then using the profits to finance a low-cost family car. And not only is the low-cost car coming, it's actually coming sooner than expected. Okay, let's move on to the actual financials. Okay, so yeah, we have profitability of $1.2 billion GAAP, $1.1 billion GAAP net income, $1.5 billion now I can GAAP net income, just going off the numbers. Cash, operating cash flow of $200 million, free cash flow of negative $2.5 billion. Okay, so what happened here was at $1 billion of it was AI CapEx. This is training for FSD. And it also $2.7 billion was in inventory. And that was actually due to a misconfiguration of the vehicles being produced. So some vehicles got misconfigured, and that will be corrected in Q2. And Q2 will be free cash flow positive. So it's going to be a huge swing from 2.5 negative to positivity on free cash flow in just this next quarter, the quarter that we're currently in. Now, you have $2.2 billion decreasing cash to $26.9 billion. 69, see it in there? Okay, so yeah, increased AI training compute by more than, okay, so the 130% AI training compute increase, that was quarter over quarter. It doesn't state it here in the slide, but that's quarter over quarter. And you'll see that in a second. That is massive. That is huge expenditures for primarily NVIDIA's H100 chip, which is another company's investments or earnings I'll be looking forward to. Okay, so yeah, record energy storage deployments of 4.1 gigawatts and produced over 1,000 Cybertrucks in a single week in April. Now, what does that mean? It actually means that the Cybertruck alone has matched Rivian's annual production, assuming the Cybertruck can, keep the 1,000 per week average going forward. So it didn't take Tesla long to catch Rivian on that one. And actually, I still have yet to see that on the road. Can't wait to see it. Okay, so what do they say? Summary. We experienced numerous challenges in Q1 from the Red Sea conflict. Don't forget that one. And the arson attack at Gigafactory Berlin. I call that a terrorist attack, personally. To the gradual ramp of the updated Model 3 in Fremont. So those were the negatives. Those were the headwinds in the quarter. Excluding Cybertruck and unscheduled downtime, our COGS per unit declined sequentially, driven primarily by lower raw material costs. See, the reason that Elon goes into this in the conference call, but the reason raw material costs decline for batteries was because all the other manufacturers are hightailing it out of EVs and into hybrids. So the demand for battery products decreased substantially. Really, Tesla is the only one going in the right direction here. Everybody else is bailing on EVs, and that's the wrong approach. They're making a huge mistake here. Global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs, as I just mentioned. While a positive for our regulatory credits business, we prefer the industry to continue pushing EV adoption, which is in line with our mission. To support our growth, we have been increasing awareness and expanding vehicle financing programs. including attractive lease terms for our customers. They don't mention here, but they're also doing low interest rates. While many are pulling back on their investments, we are investing in future growth, including our AI infrastructure, production capacity, our supercharger and service networks, and new product infrastructure, with $2.8 billion of CapEx in Q1. See, this is the thing that separates Tesla from everybody else. Tesla is pumping money into research and development for full self-driving. The only other companies doing full self-driving, say Waymo or Cruise or whoever else, they're all they don't make cars. Tesla is the only company that makes cars that also is investing in full self-driving, autonomous vehicles. Now, the benefit here is that, let's take Waymo for example. Each of Waymo's vehicles costs about over $200,000 for Waymo as a cost. That is massive. And there's only about 100 Waymos on the road. Only 100. How many does Tesla have? Like 2 million? 2 million versus 100. You tell me which one's collecting more data right now. So yeah, while all the others have to procure their vehicles from some manufacturer and then plug in their FSD hardware into that, like LiDARs and everything else that they're using, all the cameras, which is a huge cost to them. Like I said, up to $200,000. Tesla's going to be able to produce these cars for $25,000 to $30,000, assuming. That's kind of an assumption just based off of inflation recently. So yeah, Tesla's going to be able to expand their network far faster than any other system, any other robotaxi, autonomous driving system. That's number one. Number two, the reason they're going to be able to do that is because of the technology itself. The others rely on HD maps. The problem with HD maps is that everything has to be pre-mapped. And that is a huge time expenditure. There's a linear cost as you add each city to the map to be mapped. You have to add each street to the city, and that is a static map. So anytime something changes, you have to remap that section. It's not a scalable solution. The only solution that will work is a solution that has, basically eyes, vision, and a brain. That's it. By the way, the sounds are coming from Shama, my cat. She's actually, over there. Okay, so moving on. Where was I? We recently undertook a cost-cutting exercise to increase operational efficiency. We also remain committed to company-wide cost reduction, including reducing COGS per vehicle. Ultimately, we are focused on profitable growth, including by leveraging existing factories and production lines to introduce new and more affordable products. I'll discuss that later. The future is not only electric, but also autonomous. We believe scaled autonomy is only possible with data from millions of vehicles and an immense AI training cluster. We have and continue to expand both. To make FSD supervised more accessible, we reduced the price of subscription to $99 per month and the purchase price $8,000 in the United States. Okay, so regarding the decrease in price of FSD supervised to $99 per month, I consider that to be like the drug dealer model. It's a gateway. What that's going to do is it's going to get people onto FSD. It's going to get people onto the trial, the free trial, the 30-day free trial, and then to subscribe for a very cheap $99 per month. And then once they're addicted, Tesla will be able to increase the price gradually over time. And that increase in price will bring in substantial profits and substantial revenues. You'll have to see my financial model on Patreon, my DCF Valuation model. It is enormous. Okay, so what do we have? We have automotive revenues are down 13% year over year to $17.37 billion. Of note, energy is up 7%, and services and other revenue is up 25%. Okay, the thing about energy is that actually Tesla is projecting the energy business to grow 70% in 2024 versus 2023. So it's going to explode from here. So this is actually a very low number. It's going to increase substantially in Q2, Q3, and Q4. Give or take. It's kind of a lumpy business, but it will increase substantially. Revenues are down 9%, gross profits down 18%, GAAP gross margins down 199 basis points. Blah, 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 blah. The rest of it you kind of know. You can read it here if you like. And we went over most of these numbers already. Now, again, these numbers aren't really that important because this is just in the past quarter. Everything's going to improve from here in Q2. Tesla will be free cash flow positive in Q2, whereas they were negative in this last quarter. So yeah, this is just kind of a bump in the road to glory. And the glory is going to be the compact car and all the other releases in 2025. I'll go over that later. Let's go over this really quick. And then I'm going to go over the good stuff soon. Okay, so revenue. The negatives were reduced ASPs, decline in vehicle deliveries due to the Model 3 update at the Fremont factory, and Giga Berlin production disruptions. And then the positives were growth in other parts of the business and higher FSD revenue recognition year over year due to the release of the Auto Park feature in North America. What that means is they brought in a new feature to FSD, so they were able to recognize some FSD revenues that were generated previously. Profitability, reduced vehicle ASPs due to pricing and mix. These are the negatives. Increase in operating, it's kind of the same, but they included the cost of the Cybertruck production ramp. And let's see, everything else is kind of the same as before. One positive is the gross profit growth in energy generation and storage, including the IRA tax benefits, and higher FSD revenue recognition. We discussed that. Okay, so the operational summary, production numbers we went over previously. It's been known for a while, actually, so there's nothing really to discuss there. Storage deployed was 4 gigawatt hours. Again, this is only an increase of 4%. This will increase substantially soon. Tesla locations are up 26%, mobile service fleets up 12%, supercharger stations 26%, supercharger connectors up 27%. Okay, so the capacities, I believe these are the same as the previous report. Again, of note is Shanghai, which is 950,000, which a lot of people still missed. They increased it from, I think it was 750 to 950 a couple quarters back. Okay, so what do we have? We have a sequential decline in volumes was partially caused by the early phase of the production ramp of the Model 3 at the Fremont factory and factory shutdowns factory Berlin, resulting from the shipping diversions caused by the blah, blah, blah. We went over that. Okay, so what else is new? The Cybertruck ramp continues successfully at Texas with a sequential cost improvement in Q1, the 1,000 units in 1 week in April. Okay, so production at Giga Factory Shanghai was down sequentially due to seasonality and planned shutdowns around Chinese New Year. Demand typically improves throughout the year. As we enter new markets such as Chile, many of them will be supplied by Giga Factory Shanghai. And guess what cars they're going to want? Model Y production at Berlin was down sequentially due to impacts from the Red Sea. We went over that. Okay, this is the important part also. Despite idle capacity charges and other costs from production disruptions, COGS per unit continued to decline sequentially at Gigafactory Berlin. This is massive. That is massive. Okay, so on the right, you can see the market share declined somewhat in this last quarter. Okay, core technology, AI, intelligent software, and hardware. We've been investing in the hardware and software ecosystems necessary to achieve full vehicle autonomy and ride-hailing service. We believe a scalable and profitable autonomy business can be realized through a vision-only architecture with end-to-end neural networks, trained on billions of miles of real-world data. Since the launch of FSD Supervised 12 earlier this year, it has become clear that this architecture, long pursued by Tesla, is the right solution for scalable autonomy. To further improve our end-to-end training capability, we will continue to increase our car AI infrastructure capacity in the coming months. In Q1, we completed the transition to hardware 4, blah, 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 blah. So the hardware 4 has increased inference processing power, so a better chip, and improved cameras. I was hoping for improved camera positioning. I was hoping for 2 new cameras near the front, but they're not in this hardware version. Vehicle and other software. We rolled out FSD 30-day free trial to eligible callers in the US and Canada. It can change lanes, yada yada. We know all this stuff. So what Tesla's going to do is they're going to have their own ride-hailing application. So they're not going to sort of piggyback on top of Uber, Lyft, or anybody else. They're going to have their own software to hail their cars. So that way, Tesla's going to gobble up Uber's entire business. Uber's $150 billion market cap is going to get sucked dry by Tesla. Just think about that. Okay, 4680 ramp continues successfully in Q1 and continues to stay ahead of the Cybertruck ramp. So batteries are ramping faster than the Cybertruck. So the batteries aren't a bottleneck. Costs continue to come down sequentially as scrap yield and production rate improved. So Elon also mentioned on the call that, maybe somebody else, but anyway, it was mentioned on the call that the 4680 production is actually up 20% quarter over quarter. Okay, so one thing to note of import on the right is the massive increase in full self-driving. This is cumulative miles driven with FSD beta in billions as of April 21, 2024. So just notice how fast it's increasing. It actually went from 1 billion to over 1.2 billion in a very short period of time. That's what, like a month? Maybe a month and a half? It's increasing exponentially. And the reason it's increasing exponentially is because people love FSD 12. It's so smooth. If you haven't tried it, give it a try. Every Tesla investor should try Tesla FSD. Because Elon mentioned on the call that if you're an investor in Tesla, you must believe in their autonomy. If you don't believe in their autonomy, then you should not invest in Tesla. And this is also the other important factor, and this is where all the CapEx is going for AI, is these are H100 equivalent GPUs scaled, and this is Tesla's AI training capacity. So this actually includes a variety of products, includes Dojo, H100s, as well as A100s. So anyway, you can see here, it's just exploding the last couple of months, the amount of chips that they're purchasing for AI computes. This is the train FSD. This is what created FSD version 12, and this is the reason they're able to do a new release every 2 weeks. Okay, so let's moving on. Okay, other highlights. Our non-automated business is becoming increasingly profitable by Tesla. As Megapack continues to ramp and as our fleet continues to grow, we are expecting consistent profit growth of our non-automotive business. Okay, so you can see here, this includes energy as well as services and other. And it actually became profitable in 2022, and it's going well. It's going to become really profitable really soon. And it's actually growing faster than their auto business. Energy storage deployments increased sequentially to 4.1 gigawatt hours. It's a record high, and it's going to actually increase substantially more. Now, the thing also about energy storage is Tesla is building a new factory in Shanghai. It's going to mirror the Lothrop factory. So the thing is, the Lothrop factory is continuing to ramp to 40 gigawatt hours. And the Shanghai factory is going to have the same 40 gigawatt hours capacity. Currently, Tesla is doing about half of this amount, about 20 gigawatt hours. and they're going to ramp to about 80 soon. Once Shanghai is fully ramped, they're going to have 80, and they're probably going to have more factories after that. And these are highly profitable. This is actually Tesla's highest margin business, aside from FSD and a couple of other things. But compared to auto, this is a much higher margin business than auto. But yeah, it says revenues were up 7% year over year, and gross profit was up 140% year over year, driven by increased Megapack deployments, partially offset by decrease in solar deployments. So you can see right here how important Megapack is to energy. Service and other grew 25%, while gross profit was down 40%. The biggest driver of gross profit reduction year over year was lower used vehicle profit, partially offset by growth in gross profit from part sales. Okay, let's move on. Okay, outlook, volume. Our company is currently in between two major growth waves. The first one began with the global expansion of the Model 3 and Y platform, and we believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation vehicle platform. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, as our teams work on the launch of our next generation vehicle and other products. Now, Elon was asked if 2024 is actually going to be lower in revenue than 2023. Elon said probably not. He doesn't think so. That was on the call. In 2024, the growth rates of energy storage deployments and revenue in business should outpace the automotive business. Cash looks good. Profit will improve. Okay, so this is the reason why the stock skyrocketed up 12%. And the reason is this. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. These new vehicles, including more affordable models, will utilize aspects of the next generation platform as well as aspects of our current platforms. And we will be able to be produced on the same manufacturing lines as our current vehicle lineup. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi product will continue to pursue a revolutionary, unboxed manufacturing strategy. Okay, so that's a lot of words, and you may have gotten lost. So what Tesla is saying is that they have sort of restructured their compact car. Their compact car originally was going to be built on the unbox strategy, similar to the robotaxi, where they were going to build cars in modules. You're going to have the front, the back, the sides, the center, and all 5 pieces were going to be combined at the end and basically bolted together, and there's your car. And that was going to be a new modular design, which Tesla calls the unboxed manufacturing strategy. Cars have never been built on that particular structure or setup. They're currently built on a single line, and this single line is very slow and inefficient. And it's been the way since Ford invented it in 1924. So the thing about this is, and it's been the standard ever since. Since Ford invented it, this has been the standard for building a car. This is how you do it. This is how everybody does it. And there's reasons for it, but Tesla believes they found a better way to do it that uses 40% lower factory space and is able to actually output cars faster than the single assembly line. Now, the reason why they're not doing this for the Model 3 is a couple of reasons. Number one is, as mentioned here, Tesla's current lines are underutilized. The current lines they're producing about 1.8 million cars in 2023. However, they have production capacity of over 3 million cars on those same lines. So that's an extreme lower utilization than they can actually do if those lines were at full capacity. So bringing more product onto those lines will increase profits substantially because nothing hurts profits more than underutilization. So that's their focus right now, is to utilize these lines. Now, another benefit that this brings is they can use the same lines and not have to build new lines for this next million car jump. So this million car jump can be built on existing lines, and this also helps lower future capex substantially. Now, another benefit is this new unbox manufacturing strategy that they're using for robotaxi. It is an untested and unproven system. And obviously, when Tesla implements this new strategy, there's going to be bottlenecks. There's going to be hiccups. There's going to be issues, unforeseen issues, just little things that slow down production until they figure it out. They need to work it out. It's going to take them a while. It's going to take them longer than a traditional product ramp to figure it out and bring it to full capacity. So what they're doing is they're actually using it for initially right now for the lower volume robotaxi cars. Now the reason for that is that the robotaxi is going to be initially a lower volume product until they can eventually scale it to a higher volume. But due to that slower ramp and due to the lower or the higher regulatory hurdles that the robotaxi has to go through, this will allow Tesla to sort of have the robotaxis scale match their actual demand, because the demand is going to be a little bit slower than a traditional vehicle due to these regulations. So they're able to do this with the robotaxi. They cannot do this with the compact car, because the compact car should sell, I'm guessing, 3 to 5 million cars per year. Why 3 to 5 million? Well, think about it. How many cars does Tesla sell to, say, Mexico? 0. I went to Mexico recently, a couple weeks ago. I saw not one Tesla car. Why? Mexican drivers, they want cheap cars and they want small cars. Tesla currently offers neither. So that's one thing that they need, and that's what this will bring them. So this will be Tesla's leverage, their wedge, to get into all these markets. So they're going to get into Latin America, as mentioned, Chile. This will get into huge. This will be huge for China. This will be huge for Europe. Every Tesla factory, I think, well, the major ones. So you're going to have Texas, you're going to have Berlin, and you're going to have Shanghai, and the next factory. I believe all of those factories will be producing this compact car. And this is also the reason that they want to use their existing product lines, which are not currently fully utilized. And I think I discussed everything for that. Okay, moving on. Okay, so yeah, charts. Global BEV market share, 12 months trailing. You can see it's slowed down. It'll speed back up, but for now, EVs are having difficulty expanding. Now, the one cool thing is that Tesla's ecosystem, more than just vehicles, these are all the products that Tesla has or that they're working on. You can see how they work with each other. This shows their integrations with each other. So you have, okay, I don't care about solar, so let's forget about solar. But anyway, you have energy storage, which is connected to AutoBidder. You have lithium refining, which is connected to battery cells, and then battery cells is connected to energy storage and vehicles. You can see all the arrows. Let me zoom in just a little bit so you can see it a little bit better. So this shows the vertical integration nature of Tesla's business. This is how purely vertically integrated Tesla is, and nobody else has this. Nobody else has this vertical integration. This is what will drive everything. For example, FSD relies on AI compute. Human robots also rely on AI compute. Just everything is all connected to each other. And it's this vertical integration that's going to make Tesla the largest company in the world by market cap. Easily. Well, not easily. It's hard. It will be very hard. But they will become the biggest market cap. So you got Cybertrucks. Okay, the other thing is, well, actually, this is interesting. This is probably the first and only time you'll see a Rivian on a Tesla slideshow. And a Hummer, same picture, with a Cybertruck. Okay, so the other thing is, this was never shown before. Well, at least this version of it. An earlier version was. This version was not. So this is Tesla's current robotaxi app. This is basically their Uber. So this is the ride-hailing system. You can see here you could summon a car. It shows how far away it is, the interior climate of the car, arriving now, and whatever. And a 3D visualized map. Okay, so sorry, cat's interrupting me. I forgot what I was going to say. I'll remember. Let's continue. So you got a Dojo. Okay. Mega Pack. Okay. Okay, so Tesla Semi is starting production in Giga, Nevada. This should be up within a year, I think. Cost grind, squeezing every penny out of vehicle cost. And the metrics we kind of already went over. Financial statements we already went over. Anything special? Nothing out of the ordinary here. What else do we have? Balance sheet. Okay, so yeah, as mentioned, one of the major reasons for the jump in capex was inventory. So inventory increased to $3.7 billion, but that will correct. That will correct in Q2 very soon. So we got cash flows, which, let's see here. Changes in operating assets and liabilities. This is the inventory issue right there. So yeah, that's the inventory issue. And then you also got capital expenditures at $2.7 billion. And other stuff. Okay, moving on. Oh, another reason why Tesla has so much cash in hand is for issues like this. They still have $26.9 billion. They're at zero risk of bankruptcy. Zero. Had this happened in the previous quarter, I'd be worried, but I'm not at all worried. Though, worried? I don't think so. Okay, so yeah, interest expense was actually a positive number because they have more cash than debt. And, okay. So anyway. Okay, oh yeah, moving on to the call. What do we got for the call? Okay, so Elon mentioned that the updated Model 3 in Fremont EV adoption rate globally is under pressure. This is for all companies, not just for Tesla. Elon mentioned that other autos are pulling back in EVs and going to plug-in hybrids instead. And he thinks this is not the right strategy. EVs will ultimately dominate the market. And that's why Tesla is concentrating only on EVs. He mentioned that energy storage is all-time high. Energy is growing faster than the car business. AI training capacity more than doubled sequentially. Again, get your friends, get your family into FSD12 and just let them tell you what they think of it. And so yeah, new models are accelerating. So the new models are not going to launch in late 2025. They're going to launch in early 25, if not late 2024, which is soon. He says this allows us to go over 3 million vehicle capacity when fully realized. FSD12 is profound. It's a rapid rate of improvements. Pushed out to 1.8 million vehicles, half have used it. 300 million miles driven with FSD12, $99 a month. Oh yeah, robotaxi is now called cybercab. That's how I guess we're going to be using that word from now on. Okay, so also to date, Tesla has purchased 35,000 H100s. By the end of the year, that's projected to grow to 85,000 H100s. So from 35 to 80, that's 50,000 times, let's say it's $30,000 each. So that's $1.5 billion in extra AI compute that they need to purchase this year. So 1.5 billion expected for throughout the rest of the year. Model Y margins in Austin and Berlin are almost at the Fremont levels, which is very good. They're scaled nicely. Energy margins are 24.6%. Energy storage in 24 is expected to be up 70%. Now the inventory build is expected to reverse in Q2 and return to a positive free cash flow. Now, the cool thing is, here is Elon is really focused. He wasn't rambling on this call. And that's another reason why investors are excited and purchase the stock in droves, is Elon is focused and Tesla is his baby, and he will drive Tesla, I think, possibly to a 10x from here. 4680s are up 20% quarter over quarter. The goal is to beat supplier costs of nickel-based suppliers by the end of this year. Optimus is in the factory doing tasks by the end of this year. Sold externally to customers, hopefully, by the end of 2025. Tesla AI inference efficiency is better than anybody for humanoid robot companies. Regulations require data. These are just kind of notes I took. I'm just reading off the notes verbatim. So yeah, for robotaxi, Tesla's going to run the entire fleet. So they're not relying on Uber, they're not relying on Lyft or anybody else. Tesla's going to run this fleet. And this is another part of the vertical integration. Now, some numbers of cars that Tesla will own itself, and some others will be owned by customers. Oh yeah, this is the thing I forgot before. A user will be able to add or subtract their car to the Tesla robotaxi fleet at will. They'll just be able to load the app, says, hey, add me to the fleet. Click, one button, done. Or they can say, hey, I need my car. I need to drive. Return my car. Done. It's off of the robotaxi fleet. It's as easy as that. And no other robotaxi autonomous driving firm will be able to do this. None. Because they don't use customer-owned vehicles. None of them do. Only Tesla. Only Tesla. Oh, and the other thing is Tesla is in talks with a major OEM on licensing FSD. And that will be a huge source of revenue if that comes to fruition. Let's see here. What else do we have? Oh, yeah. There's going to be filters. So when the user adds their car to the fleet, they can add a filter to that car to say, you know what? I want this only to go to friends and family. Or I want this to, go to this certain segment, that certain. I want this to only go to 5-star people. They can add those filters to their car. And again, this is a only robotaxi feature. Nobody else does this. Now, Elon's projecting, he said 7 million cars, then he said 9 million cars, eventually tens of millions of cars being able to potentially do robotaxi. Can you imagine tens of millions of cars collecting $30,000 per year per car in gross profit? So yeah, Hardware 5 is going to be in cars by the end of next year. When the car is not moving, it's going to run distributed inference. Honestly, I wouldn't really put much faith into that. Think of that like Dojo. Just kind of it's there, but I wouldn't really I'm not putting any money towards that. I'm not valuing that in my DCF. There's going to be a fleet of 100 million Teslas eventually. Tesla has hundreds of AI test drivers. He mentioned a feedback loop for FSD. And, Lathrop's increasing production from 20 gigawatt hours at the beginning of this year to 40 gigawatt hours at the end of this year. And that will be the maximum capacity of that factory. In the Q&A, Elon specifically mentioned, don't invest in Tesla if you do not believe they will solve autonomy. And I believe that as well. You'll see in my valuation that if Tesla does not solve autonomy, there's really not that much upside to the stock. And also he said that FSD works almost anywhere, but will have country-specific training because certain countries do things a little bit differently than other countries. However, he said that the vast majority of FSD compute will be able to be shared amongst different countries. And this is why Tesla's FSD can work and does work in Canada. And Elon also mentioned that he implemented a simplified sales process. So he got rid of a lot of the mumbo jumbo and a lot of the complications on the website. So that's a big improvement there as well. So yeah, that's it for the call. And time for my DCF. So for my DCF, now this is just auto and energy. Now I predict that auto and energy today should value Tesla at $242.71. This was taken a little bit ago. This was actually back when Tesla was at $171, actually a little higher than today's share price. But anyway, by the time I recorded this was an upside of 41.9%. Now, if you add FSD into the mix, the number goes much higher. If you add robotaxis into the mix, the number also goes much higher. How much higher? Well, you have to check out my Patreon. I have valuation models on auto plus energy plus FSD plus robotaxi at my Patreon. I have auto plus energy plus FSD also at my Patreon. So check those out. It is a can't miss. I have a 7-day, tell you what, I have a 7-day free trial. So if you want to see the number, just subscribe. And then if you don't like it, just unsubscribe within 7 days and you still get the DCF model for free. Can't beat that deal, can you? You really can't. So yeah, don't forget to like and subscribe. Thank you for watching, and now I'll see you in the next one.